Hello everybody, this is Pat Walker, Mission Winners, doing a video here on the ETFs. You can say, why do we do this? It's not because we're enthralled with looking at a bunch of charts all the time. Helps us make better decisions, helps us make money, helps us also stay out of trouble, helps us prevent us from losing money. We combine all those variables together. It keeps us motivated. And here's a fact. Leading stocks produce leading groups, and leading groups produce leading stocks. I don't mean that in a cute tongue-in-cheek way. It's just a fact. So what do? We focus on where there's strength. By doing this, scanning the ETFs, we have a great idea where money is flowing, but also areas to avoid. An example here. Oh, by the way, the purple line's the 200-day, the green line's the 50-day, the blue line is the 21 EMA. These are simple, by the way, and this is exponential. And the yellow line is the 8-period exponential moving average. It's below the moving averages right here. Okay, it's got a higher low, tons of overhead. There's no leadership here in biotechnology. Cloud computing falling. There's no leadership in cloud computing. Lifted a little bit, but it's falling. Just leave the group alone. Energy is strong. Do you see this right here? And I'll say this, and you'll see a couple more. This is why we are involved and have been involved primarily in energy. It's leading. Remember that. Dow Jones Internet, nothing's happening with Internet. 50 right here. IBD 50, lagging. Nothing's happening here. All right, as you can see. These are the leading stocks. By the way, I'm not slamming the IBD 50. No, I'm not slamming any of these. I'm just observing what is. All right. These are just statements of what's going on. It's not an editorial statement. I don't do that. But this is a great ETF to see where there's leadership, if there is leadership or not in the market. Here we go. Gold miners. Look at this. Dead. Nothing going on. Junior gold miners. Dead. Nothing going on. Gold. Not bad looking. The gold miners look bad. Gold's kind of hanging in. But note this. See where it advanced? And then it fell on heavier volume, and then it fell again on heavy volume. Okay? It's chopping around here. A little bit of support on the 200 and the 50-day. Got to watch it. GLD, maybe. Cybersecurity, dead. Biotechnology, another biotechnology ETF, dead. Online retail. There's nothing good here. Don't overthink it. Like, maybe this is the bounce. Why play the maybe game when we can find something that's good and ride it for all it's worth? You can say, oh, you mean like this? No. I mean like this or this. Right now, there's nothing. I just want to point those out. All right, let's continue on here. Biotechnology lagging, mid-cap lagging, meta. Okay, the metaverse, you know. There's nothing happening here that's good. Leave it alone. Oil services, energy related, looking good. See this? You know, I just showed you a bunch of ETFs that look awful, and this is hanging in. There you go. Oil, look at that, hitting highs. Market's choppy and all this stuff. Look at what oil's doing. What has that been telling us? I guess we should look at energy stocks. Like I said, and we're involved with them. Online retail, nothing. Infrastructure was strong, and now it's really lagging. It's below the 200-day. Leave it alone. By the way, this is a great foundation for all of us. When something's below the 200-day, yeah, pretty much leave it alone. And when it's below the falling 200-day and the falling 50-day, just move on, okay? There's better places to put your money. This is the inverse QID, okay, of QLD. Just still chopping here. Okay, now QLD runs up to the 200-day, backs off. Till this starts to lift, could have another higher low here. Until this starts really lifting and pushing through the 200-day, be careful. And that could happen at any time. Same thing's true with QQQ. Retail is lagging. Okay, there's nothing special there. Cloud computing, lagging, nothing to do with it. Silver, dead. Leave it alone. Steel, it's okay, but it's below the 200-day, a little bit above the... There's not a lot of power there. Semiconductors, lagging, nothing to do with it. Semiconductors, lagging, nothing to do with it. I'll slow down. I wasn't doing that to frustrate you, but just pointing out. You can just look at it and say, I ain't buying semiconductors. You're done. It's that simple. Spiders ran up. This had a higher low setup. You see this? We bought, and I'll show you in a minute, and we sold into strength, and it's good we did. There you go. Maybe it's going to form another higher low. We'll see. SSO, I want to show this to you. See that? Those were 4 buys here. 4 buys. Ran up, sold into strength, started a gap. We sold the rest, locked in the profits. No day trading, but good money made in a short period of time. Now we just sit tight and see what it does. All right? We don't force it. Solar stocks, leave it alone. Small cap, lagging, leave it alone. Uranium, lagging, leave it alone. Oil. Oh, gee, gosh, let me see. Oil. Is there... What is oil? Oh, yeah, that's right. It's energy. It's energy related. There you go. And yes, we are involved heavily in oil. Aerospace defense, dead. Leave it alone. Home builders, dead. Leave it alone. Materials lagging, nothing to do with it. Energy. There you go. Financials starting to show a little life. That's not bad. So what could you do? Knowing this, what could you do? Look at a couple of financial stocks. Look at some financial stocks. See what they're doing. Click on XLF and find out what their top 10 holdings are. There you go. That's, by the way, that's free information. Systemization. Love it. Industrial. Shopping around, nothing to do with it. Technology, choppy. Really nothing special there, team. Not a lot to do with it. Consumer staples. I posted this last week, okay, because we do this ETF video every week. I look at these every day, folks, all right? Consumer staples. These are things the consumer has to have, not discretionary stuff like, I don't really need that, but I do need toothpaste. I do need toothpaste. Oh, yeah, I need toilet paper too, okay? I'm not saying that to be cute. Staples, things you gotta have, which is pretty much a defensive type of sector, right? And it's hanging in pretty good. Defensive. Look at that. Utilities kind of hanging in, okay? Consumer discretionary, lagging. You see that? Lagging. What does that tell you? The consumer's not buying stuff that's not, quote unquote, necessary. And again, it's further evidence that, there's weakness in the economy. Metals and mining, kind of chopping around here a little bit, fell. This is wide and loose. Be careful with it. Oh, oil. Oh, look at this. Another oil. Doesn't look too bad, does it? Energy. There you go. Retail, dead. Nothing to do with it. Software, dead. Nothing to do with it. And back to the top. So let's go in and now look at the max list. Here we go. There's Apple. Apple. We had buys right here. A couple of buys. That's good money. Okay? Good money. Locked profits in. Comes all the way down here. Forming a base here. Potential. Apple is above the 50-day. This is very important for everybody. This is the 50-day moving average line. I was an IBD meetup co-leader for 12 years, got on the stage and talked about this stuff. It sounds like a corny phrase, but it's a fact. The air is better above the rising 50-day moving average line. Okay? Just remember that. That'll help you. When you finally say to yourself, you know what, I don't know if I'm going to buy any stocks below the 50-day, or definitely not below the falling 50-day, guess what? You'll be in more control, better control, increase your potential for making money, increase your potential for not having big losses. That's a fact, okay? So let's continue onwards. Here we go. Amazon. This gapped up right here. What was this from? This was from earnings, all right? Look at this now. It's chopping around. I like what it did Friday. That's good. That's a start. Why did it do that? It was earnings related, okay? We'll have to watch this. Maybe it will form a small shelf or base here and would be a potential. Just wait and see. It'll tell you what to do. That's the beautiful part about this. Admission winners, I don't forecast. Do you know the future? I don't. I don't know any of it. Only thing I know is it's going to get dark tonight and the sun will come up tomorrow. That's about it. Get in line with what is. Makes life easier. Helps with the decision-making process and also lessens stress. When we accept the fact we don't know the future, we look at it and plan accordingly. There you go. Alibaba, bye-bye. BIDU, it's nothing. It's below the 200-day. It's below a falling 200-day. Until it starts showing some life, be careful with it. Facebook, please don't buy just before earnings. I've been doing this since 1986. Please be careful with that. A couple of these will wreck you. I mean, folks, that's 100 points. It'll wreck you financially, but it does something else. It can wreck a person psychologically. You've got to have the right mindset. And I've done it. It's one of my degrees, psychology. Got to have the right mindset in all facets of life. All right. And there's a good quote. I love this quote. It's not mine, but I think it's a great thought. I never met a wealthy pessimist. There's opportunity out there. We just keep looking. We wait for our setups and then we go. That's it. This is the other one I say all the time. Just because the market's open for business doesn't mean we have to do business. Wait for your pitch. Google, this gapped up on earnings. All right? Right here. Here's a classic lesson. This is why, and I tell the VIPs all the time, be careful chasing gap ups. I'll make this a little bigger for you. That's the open right there. Oh, this is it. It's Google. I'm telling you, nothing. It's the best company there is, you know. I'm not endorsing it. Please don't take it that way. Gaps up. Yeah, I'm buying that. This is it. It's off to the races. Dang thing falls, what, over 200 points here? Don't do it. Let it settle down. Let it settle down. Eventually, it may form a good entry spot. We'll see. So anyway, there you go. Google does not look bad. Goldman Sachs, yeah, it's below the moving averages, folks. Till this lifts, leave it alone. MasterCard, lifted off, doesn't look too bad. Here's the weekly, by the way. One negative, lifted, follows through, and pretty much and tailed off quite a bit. You've got to be careful with that, all right? You can see the lift. This is also one of the reasons why one of the tactics we use at Mission Winners, we'll sell some into strength. Not all of it, just some. No day trading, by the way. I haven't looked at a 5-minute chart this year. I haven't looked at a 5-minute chart last year. Leave all that alone, okay? That will help you make better decisions. This is true confession. Years ago, actually decades ago, I used to look at the 5-minute chart a lot. There's too much emotion in the 5-minute chart. Now, if you're a day trader and you're doing good with it, stick with it. I like to buy something and ride trends for as long as I can. That's how good money is made with low stress. That'll help you, okay? Microsoft, chopping around here. There's nothing really good with it. You can say, okay, so you talk about buying good trends, Pat. What do you mean? Buying right here, which we did, and I call that a good trend. That's just really nice, folks. You're just riding the trend. Riding around in my automobile. Okay, I'm sorry. I'll quit singing. And you're going, I don't know if I call that singing or not, Pat, but you can see gaps up, reverses down, heavier volume. These are sell bars. That's what we did. So let's go back and look at it now. It's just chopping around. But here's the weekly. And this is important. This is why I always look at weekly too. See that weekly volume? You see that bar last week? That wasn't Uncle Ernie buying or Aunt B. That was serious. Perhaps it will go sideways and form, perhaps what? A little shelf here. Right in here for a potential lift. I'm not saying it will, but it is going sideways here. Something to watch. There you go. Netflix. Yee, they're not even renting that, baby. There's nothing to do with it. Square. Yeah. This is called what's called a rounding error, right? No, this is a mess. Yes, it's Square. They're very innovative. I'll just stay with it. I bought it around 250. Yeah, and it comes down to near 100. Come on. No, we don't do that. Here's a great lesson for everybody. When stocks are below the 200-day and or the fallen 50-day, be really careful. Try to avoid them. If you do that, you will be light years ahead of most people. It's that simple. Nvidia, what does Nvidia have here? Well, this is a higher low. This low is higher than this low. And I told, let's put it out. And so that's a buy. VIPs bought it, sold into that strength. What kind of a move was it? Well, I don't know. It's 30 points. 30 points in 4 days. I don't think that's too bad. Okay. You didn't sell at the top, by the way. But there's one. You could say that's a higher low. This is a great lesson. This is a tactic I have used for years. This low is higher than this low. When you see that, that means the selling pressure normally is dried up. Look for an entry. Right there. You see that? That's called a higher low. What do you call this? I know you're going to get it, right? It's a higher low. See that inside bar and a slight pickup in volume? I made a video on this. This was on the key list. Boom, you're in. And twice. And, you know, you're in here. Say you bought it for 210, okay? 210 up to over 300. Hey, that's good money. There you go. Just riding the trends, all right? There's Tesla. Now, this is good. Tesla had earnings, all right? And the stock's lifted. What's it doing right now? Well, you could say it's forming a higher low. It's above the 200-day. It's below the falling 50-day, but it is a MAXLIST stock. One of our caveats. Going sideways here, forming a small shelf. What do we do next? And this is for everybody. This is what we do at Mission Winners. Take a look at the hourly. What do you see? Well, I don't think I really need to overthink it too much, do we? You got a shelf there, folks. Am I saying it's going to break out? No, I don't know the future, but I do know a clean and simple shelf like this, if the market's good, and that's a big if the market's good, this can lead to a breakout and an advance. Will it? Again, I don't know, but after looking at a lot of charts, you start developing some foundations. That's our edge. That's what we use at Mission Winners. So it pushes through that line on volume. Here's the beautiful part about it. I'm going to show you the daily chart. You know what I love about stuff like this? See that line? It pushes through that line. Guess what? Here it is for everybody. This is my gift. Price is good above the line and bad below. That keeps the losses very small, okay? Don't day trade it, by the way, and don't look at 5-minute charts. But what do you want to see? If A, a good market. B, it pushes through that line. C, it does it on really heavy volume. There you go. Doesn't happen, don't buy. You like clean and simple bases? Yeah. We do too. There you go. Proof in the pudding. Let's continue onward. So there's Tesla now. Needs to show some power. And the other important point, earnings are out of the way, okay? Twitter. I guess we could all tweet, and it's just not doing a whole lot of good, is it? So we'll leave that alone. Visa. What's the sister stock of Visa? You know what it is. It's MasterCard. Tell me birds of a feather don't flock together. Here's Visa lifting off. Here's MasterCard lifting off. Isn't that interesting how that happens? This date right here is 128. This date right here, right there, is 128. Same date. Isn't that neat? These are things that you can use. This is what we use at Mission Winners. It helps us make better investing decisions. And I have to pause here, and by the way, and say this. You can say, well, Pat, it means you never have losses. You know the only person who never has losses? There's two people who never have losses in the markets. A, those that lie, and B, those that don't invest. Okay? Yes, you have losses, but what do? If you have a clean and simple base entry, and this is important to remember, price is good above the line, and it's bad below. Netflix, right there. It's good above the line, and it just goes. There you go. Netflix lifts off and runs. Vanilla. Anyway, I wanted to share that with you. I know I went a little longer, but there's a reason why. Markets are pretty choppy right here. I just encourage you, please be careful. Focus on clean and simple. When it's pushing through that pivot, look for that volume surge on lesser time frames. That means other people see what you see and they are acting on it.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.